Hi, I'm Sarah Benwell, the editor of insuranceinvestor.com, and I'm here with Michael Eakins, Chief Investment Officer at Phoenix. Michael is speaking at the Insurance Investor Live conference on November 10th, so we wanted to catch up with him to hear a little bit about what he's going to be talking about. Hi, Michael.
Hey, Sarah, how are you?
Good, thank you. So my first question is, what opportunities do co-investment and other third-party partnerships offer for insurance investors?
Great question. I mean, look, I think the opportunities that come about from co-investment and partnering up with third parties, are significant and they're material for insurance investors. They allow us to get access to long-dated cash flows in a format that is conducive to our liabilities and consistent with our liabilities. So in short order, they can give us access to long-dated asset flows that are a really good match for our liabilities. I'd say there's two other areas that we'd highlight. One is they give us access to certain areas of expertise that maybe we don't have in-house, if we can partner up with the right third party. And the third area is there's some really, and it's particularly relevant in the context of the move to decarbonisation, but they can also afford and give access to asset classes that have got very high ESG content, and particularly in areas that is cutting edge in the whole decarbonisation. And here I'm thinking about the green energy technology that's very much evolving.
Great, thank you. And how is Phoenix thinking about co-investment? And are there any recent initiatives that you can talk about?
Yes, absolutely. Look, well, we really do believe in co-investment because we think if we find the right partner, we can align their interests with our interests to give us both an investment outcome that's suitable, for our independent balance sheets. And we think that's very important. I mean, we think about co-investments in both the equity space and also in the debt space. In the equity space, we've recently invested a very material amount of our policyholder assets in venture capital, as an example. That's a really important asset class for us because it's an asset class that's got a proven track record of giving incremental returns over the very long term. It's also an asset class that's got very high ESG characteristics. And third and finally, it's an asset class that it's very difficult to access for the average person in the street. And so by us including this in our policyholder assets, it gives our policyholders a very modest exposure to VC. So we definitely think about it and have done it in the equity space. We also do it in the debt space. Very commonly we'll invest alongside other large institutional investors who maybe want to take the equity piece in an infrastructure asset, and we'll provide the debt. Again, it's very important that we align, set out our interests and our focus areas and make sure that they align very much with other providers in the capital structure. And again, I think we've done that recently and successfully in the infrastructure space, but also in the real estate space.
Great, thank you. That's really interesting. And when you're choosing your co-investment partners, what are some of the main things that you have to consider?
Well, it really comes down to this, alignment of interests, and our interests aligned. And of course, you can do that through the legal documentation, but actually, fundamentally for us, there's some really important cultural aspects that we really want to, that are really important to us in terms of the partners who will co-invest in. The first is, we are a very long-dated investor. We invest over multiple decades to meet obligation to our policyholders, which also manifest themselves over multiple decades. And it's really important that actually our partners, they don't necessarily need to have the same liability profile that we have, but it's also really important to us that our partners also take a very long-term view on investments. The second area I'd highlight is around ESG. And here, this really sort of is in the sort of must-have category. We will only co-invest with partners who've got very similar aspirations in ESG and standards that we have. And if I think about, our commitment to be carbon net zero by 2050, again, I couldn't envisage us investing alongside a third party who didn't have similar aspirations as it relates to the decarbonisation of their asset portfolio.
Great, thank you. And last one, what are some of the risks that exist around co-investment and how can they be mitigated?
Well, look, the legal documentation and the rigor and thoroughness of the legal documentation is really, really important. And that's the sort of, if you like, the bedrock of how you mitigate some of the risks. But also going into it, thinking through and doing really a wide-ranging stress and scenario testing. So really thinking up the sort of unthinkable risks at outset and how both in parties or the multiple parties would react to that is really, really important. And as an example, we are significant investors and we lend to airports. It's an asset class that we like. And I think, ourselves and others, even pre-COVID, it would be very difficult to envisage a scenario where air traffic literally comes to a grinding halt in the sort of weeks and months around sort of March, April last year. And that had some consequences on those asset classes. And that really does, the lessons learned from that. And, we've worked through with our other investors in assets like airports. But the lesson there is you really do need to have a very, very wide ranging stress and scenario testing in order to try and pick up some of the risks that really sit in the tails of the distribution. That's really what's important. And so you go into it eyes wide open, very thorough legal documentation, but also, very sort of transparent and wide ranging stress and scenario testing.
Lovely. Well, thank you so much. It's been so great talking to you, and we're really looking forward to hearing more from you at the conference on the 10th of November.
Likewise, Sarah. Thanks a lot.